Greetings and welcome to the latest edition of Legal Bites, the official podcast of Cummings and Cummings Law, where we focus on helping businesses and their owners re-domesticate out of volatile legal and tax environments like Louisiana to more predictable pro-growth, pro-entrepreneurship jurisdictions. Today, we are discussing how to move your existing LLC or corporation out of Louisiana to a new state to avail yourself of tax benefits, among other advantages. But first, a brief introduction. My name is Chad Cummings, and I am an attorney and certified public accountant serving clients in matters of business, tax, and commercial law. I am Chief Executive Officer of the multi-state, multi-attorney law firm Cummings and Cummings Law. And in addition to my day job, I also teach business and tax law at the university level. I hold 4 degrees, including 2 law degrees, together with a bachelor's degree in accounting and a master's degree in taxation, in addition to 11 professional licenses and certifications covering accounting, tax, audit, and of course, the law. My firm website is www.cummings.law. Now, Louisiana ranks 31st on the Tax Foundation's most recent state tax competitiveness index. That is not a good thing. That is a bad thing. That number, however, does not tell the full story, because Louisiana moved 9 places since 2020 and 6 places in the most recent update alone. In a late 2024 special session, the Louisiana legislature enacted the most comprehensive tax reform in the state's history. The graduated individual income tax was replaced with a flat individual rate of 3%. The corporate income tax was set at a flat 5.5%. The state adopted permanent full expensing, making it one of the first 3 states to decouple from federal phase downs. The franchise tax on corporate net worth is being repealed in 2026, or at least is scheduled to. And Louisiana finally recognized Subchapter S corporation status after years as the only state in the country that required S corps to file as Subchapter C corporations, which was extremely unfriendly to taxpayers generally and small business owners specifically. The individual income tax component improved from 32nd place to 15th. The corporate tax component improved from 29th to 10th. The Tax Foundation expects further improvement in the next edition. So the reforms are real. The problem that remains, however, is the egregious sales tax. Louisiana has the highest combined state and local sales tax rate in the country at 10.1%. That is not a rounding difference. That is a full percentage point higher than the next highest state. For businesses that sell goods or services to consumers in Louisiana, the 10.1% rate is a direct cost to the customer and a direct drag on competitiveness against businesses operating in states with lower rates. The rate is only half the problem. Louisiana is the only state in the country without centralized sales tax administration. Each of the state's 64 parishes collects and administers sales tax independently. If that sounds like a nightmare, it is. A business that operates across multiple parishes must register with, file returns with, and remit sales tax to each parish separately. The forms differ, the rates differ, and the rules differ. The compliance cost is extreme and scales with the number of parishes in which the business operates. No other state imposes this burden. The Tax Foundation identifies this as one of the most complicated sales tax regimes in the nation. If the Tax Foundation is calling something complicated, you know it has to be bad. Louisiana still taxes business inventory, which is archaic in the year 2026 and beyond. That tax applies regardless of whether the business even earned a profit. A company that holds goods for sale, raw materials for manufacturing, or finished products for distribution pays a tax on the value of those assets every year, regardless of whether it made or lost money. Most states have abandoned inventory taxes because they penalize physical operations and discourage investment in goods producing businesses. Louisiana still has not got the memo. The corporate income tax brackets are not indexed for inflation. The sales tax base continues to exempt several categories of services, leaving it narrow and forcing the rate higher to produce the same revenue. These are structural problems that the most recent reforms did not even address. State and local tax collections per capita are $5,863, while state and local debt per capita is $6,304. Public pension plans are funded at only 78%. Now, the good news is that Louisiana does not impose an estate tax or an inheritance tax. The fiscal position is okay, not great. We'll call it moderate. The risk is that the sales tax structure, inventory tax, and the parish by parish administration creates costs and complexities that the income tax reform did not address. On $500,000 of pass-through income, 3% produces $15,000 in state income tax every year. In Florida, that figure is zero. In Texas, that figure is also zero. Over 10 years, the difference is $150,000. That's $150,000 that could have remained in the business or in the pockets of the owners. Louisiana's rate is among the lowest of any state that imposes an income tax, and that sounds great until you realize that is not the lowest possible rate, because the lowest possible rate is zero. Now, keeping all of that in mind, redomestication is the lesser known legal process of transferring a company's state of domicile to a new state without dissolving it, without creating a new entity, and without triggering a federal income tax, when performed with the required formalities under the Federal Internal Revenue Code, Treasury regulations, and the statutory frameworks of both the destination and departing states. When executed correctly, the company retains its existing federal employer identification number, contracts, credit history, and bank accounts. Contrast that with foreign entity registration, also referred to as foreign qualification. Foreign entity registration does not change the company's state of domicile. In fact, foreign entity registration keeps the entity domiciled in Louisiana indefinitely and adds a second state of compliance burdens. A traditional merger, which is also not the same thing as redomestication, creates a new distinct entity and can trigger serious tax complications. Finally, dissolution is really not an option at all. If somebody is suggesting dissolution to you, they probably don't understand what it is they're talking about, because dissolution terminates the company. Dissolution is not a relocation mechanism. It is a going out of business mechanism. Now, redomestication, when paired with a change of personal residency and a reduction or outright cessation of business operations in Louisiana, can reduce or even eliminate state tax exposure for the entity and its owners. The entity piece is what our firm handles. Now, Louisiana has improved its income tax, but it did not eliminate its income tax, and it certainly did not fix its failing sales tax system. The highest combined rate in the country with no centralized administration, 64 parishes each running their own system. That spells a serious headache for a small business owner. A 3% income tax rate at the individual level and a 10.1% sales tax rate is not a low tax state. It is a state that moves the burden from one line on their income statement to another. Keep in mind, many states, well, I shouldn't say many, but certainly a few, including Florida and Texas, impose no state-level personal income tax. If you have questions regarding potentially redomesticating your existing LLC or corporation out of Louisiana, please use the link in the description for more information on this legal process and to schedule time for you and I to speak one-on-one about your specific scenario. Again, my name is Chad Cummings, and I hope that you found this information helpful. As always, the information in this presentation is general in nature and is not legal advice, because legal advice, by definition, must be specific to a particular set of facts and circumstances. Should you have any questions regarding this information or the content of any of my earlier presentations, please visit my firm website at www.cummings.law, not .com, but .law, to schedule time for a consultation. I look forward to the opportunity to speak with and perhaps even work with you very soon.